In today's video, we're going to be having a look at what's going on at the Fed overnight, some talk about fiscal stimulus, Australian shares, and of course, a quick look at Bitcoin. Hello and welcome to another Securities Daily Report video. My name is Alastair Schultz and I'm going to be a host through today's trading journey. The first thing I'm looking at this morning is on the Federal Reserve. At about 6 a.m. Australian Eastern Standard Time, we got our announcements from the Fed on their policy decisions. At this stage, they have decided to leave the rate unchanged, nothing new there. And of course, they were going to leave the bond purchases program unchanged as well. The current estimates or the current amounts that they're spending are for $120 billion per month, $40 billion going into mortgage-backed securities, and the rest going straight into bond purchases. Now, they have also stipulated that if they do see a slowdown in recovery elements, and particularly they're going to be looking at indicators around employment and inflation, then they will likely increase some of those purchases to try and help support the economy as much as possible. Off the tick of this news, we saw Treasury yields rise as much up to 0.95%, a 0.4% rise on those yields, but they have since come back down to about 0.92%. Either way, the forecasts have also been changed. They're now forecasting unemployment to be at about 6.7% by the end of 2020 and for 5% by the end of 2021. Of course, inflation estimates remain at 1.2% for this year, but next year they have increased from 1.7 to 1.8%. Now, the next focus that we're going to be looking at is really on stimulus, but we'll come back to that in just a short little while. Looking at Bitcoin, it has flown and breached its way through the $20,000 mark. Currently, when I was looking at it right before filming today, we saw it at $21,202. That, of course, is in US dollars, so it's closer to the $28,000 to $29,000 mark on the Australian dollar. Crypto bulls are already calling for the next price target of $30,000, but some are expecting even $35K in the next 6 months. So we do have a lot of people anticipating on it. The way I'm looking at this situation and how it has risen, it is quite a volatile pair or currency or crypto, whatever you would like to call it. And it has had a lot of institutional interest this year. We've seen a number of different firms, some of them from Wall Street, all deciding to get in on the action. Right now, the constant rise that we're seeing looks to be a little bit of the FOMO effect, the fear of missing out on getting more into the profits, which means this could very well turn around quickly, but that's not something that we're not used to. If you look at the chart behind me, it wouldn't be the first time we've seen prices on Bitcoin rise up very, very quickly, only to fall in just about the same period of time. Now, moving on from Bitcoin, I've got a bit of a take on Australian shares for you today, for 2021 in fact. 2020, they underperformed all the way through the year. They were considered to be the laggard. The ASX was always sitting behind all of its peers, whether it be the S&P, the NASDAQ, or anything from the MSCI indexes. Of course, it wouldn't really matter where you looked. You generally saw that the ASX, whilst growing, was still behind. It has still not reached its absolute high of this year. It's still sitting behind by about 7%. Next year, however, we've got the advent of a vaccine providing a lot of fuel for a global rebound. Of course, that means that we're likely going to be seeing some moves back to that value cyclical style stocks, which we've been talking about for some time. We've already seen some of that process happening, but Australia is staged to get a much bigger benefit than what we see in the rest of the world. We tend to have a cyclical and value stock driven stock market. So when it looks to it, we're going to see those cyclicals see a really good benefit. Corporate profits are expected to rise, with some calling for them rising by at least 20% by the end of the year, which would put us at the best year of growth for stocks in more than a couple of decades. So looking at how we might consider playing this out, I'm going to be focusing very hard on financials and material sectors. Of course, I'm also going to be looking at the health industry, and there are probably a couple of others along the way that you could seriously consider over the long term. And some of them might even be in tech. It just depends on where you're going to be looking. I'm not negative about tech, but I'm certainly not going to be picking every single thing in it. Be wary of what you do pick if you do decide to go that route. Now, moving on, all eyes are really going to be on fiscal stimulus leading in towards the end of the year. We've also got a little bit of attention being paid to Brexit, obviously, but when it comes to the US situation, the next steps to make sure that we don't see those retail sales data continue to tick down like we've seen overnight is going to be about getting money to the people and getting spending actually happening. So we need to be looking for that next stage of fiscal stimulus coming from Congress, somewhere in about the $900 billion package. And ideally, we want to see checks in people's pockets before Christmas. But that's not likely to happen. It will likely end up slating to be just after, if it does. So we still have a little bit of traction to gain on that front, but so far people are already beginning to price in the idea of more stimulus. So let's keep an eye on what's happening on the S&P 500, which is seeing a little bit of a benefit out of it. Of course, keep an eye on your treasuries and the dollar indexes to see where things might go, and keep an eye out for pretty much anything you can news related on stimulus throughout your trading days. Now, moving on, the news ahead of today, it is a very big week for central bank action. We're going to be hearing from a lot of different places that are talking about what they're doing with their policy decisions. We've already started to hear from a couple of other countries. We've got Japan and Russia scheduled for today. We're going to be hearing from the Bank of England later today as well. We then have a number of other elements coming across the world from Indonesia all the way through to the Philippines and anywhere else in between. So keep an eye on what your central bank actions is happening this week, particularly if you are going to be trading on those currency pairs. We've already heard from the Fed this morning, so you can set that one behind you, but there is still going to be a little bit coming, including from the Swiss National Bank at some stage later today. Now, otherwise, outside of all of those central bank policy decision rates that are coming, the last ones for the year, we're going to be hearing on unemployment change and rates here in Australia. We're also going to be hearing from the Swiss National Bank, monetary policy there, Bank of England, monetary policy as well. And we're going to be hearing about unemployment change data from the US much later in the session. It's going to be just on the unemployment claims as well. So keep an eye on all of those. They're going to be important throughout today. I do expect to see a little bit of action considering the market action we've seen overnight from the US. I do anticipate seeing Asian stocks to follow. Now, if you have any questions from today's video, you want to get in contact with me, it doesn't matter really what for, feel free to shoot me an email at talktoal@acy.com or contact me on any of my other socials. And don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.